Hello and welcome to my channel. In this video, I am going to share with you one of the key principles of how you can invest in real estate without too much of a knowledge. And also I am going to share with you the first deal that I actually bought, my first investment property. And where did I buy? How did I buy? So I am going to unpack a lot of things. So if you are interested, if you are somebody who actually wants to invest in real estate, do not have much ideas where to buy, perhaps you know quite a bit of things, but you are stuck in a way that analysis paralysis, you are doing a lot of analysis, where to buy. Let me tell you, let me show you one deal, my first deal, what I did, how I bought it, and hopefully it is going to give you some sort of an idea, some sort of a knowledge for you, that it will make you think that how you can buy your investment properties as well. What are the things that you can do? I can also assure you some things that you might find is not 100% correct. 100% is because this was my first property. There are a lot of mistakes that I made. So I am going to share with you those things as well. So if you are interested, you are actually in a treat for this one, because you are going to learn quite a lot of things. Now the second thing that I also like to share with you today is the numbers behind this, like why I did buy this property and what was the thought process at that time. I wanted to share with you. It is going to be quite lengthy, and also this is going to be kind of a two-phase video. In the first video that I am going to give you what I bought and where I bought and why I bought, and then in the second part then I will going to give you kind of an idea about where we are at today and what is happening in that and what I am planning for that property and all sort of things. So if you are interested, if you want to learn, then stick around. Okay, let's start. First of all, where did I buy? So let me give you a brief story about when I bought it. I bought this property in 2015. So I came to Australia in 2014, and 2015 I bought my first investment property. So where is it? Because now I live in Sydney. Now I am actually in the western part of Sydney. So ever since I came to Australia, I have been living in Sydney. I came to Australia because my wife, at that time she was my fiance, and we just got married in 2014 itself. And then I moved from South Africa to Australia, and that's how I started my journey here in this country. Okay, that being said, then where I bought my first investment property. When I came to Australia, I did not take a job kind of like a traditional job. I am into IT, and I actually took something which is called a IT contracting. So that means I set up my own company, and through my company I have been ever since doing that IT contracting. So that's my first thing to tell you, that because I was like an entrepreneur, I'm kind of a self-employed person, I did not qualify to buy properties within 1 year. So I had to wait for 1 year financial return. In fact, most of the financier at that time, they said that you must have 2 years financial return in order to purchase, you want to borrow loan from the bank. Luckily I was looking through multiple brokers, and finally I landed up with one broker, and he said that yes, there is one lender who will give you loan with 1 year financial return. However, the interest rate would be little more. And guess what? I was very much interested to buy my first investment property. I was really crazy about that, and because of that I said okay fine, even the interest rate is little bit more, that's fine, I wanted to buy. Now let me tell you where did I buy it. So if you see that the place that I bought, it's somewhere in Queensland, and I wouldn't call it in Brisbane, and it is not in Gold Coast. So it is in between Brisbane and Gold Coast. And if I see that the address of this property is 9 Diana Street, Marsden. Now how did I go from Sydney to Brisbane all the way to buy my first investment property? Because it is quite rare. It is very unlikely that you buy your first investment property in somewhere where you are not living. These days, yes, through buyer agent there are a lot of people who are buying that, but this is the property that I bought without any buyer agent, without much knowledge. So what did I do? Okay, before that I can just give you a quick snippet of how I started about learning about real estate investment. In 2014, when I came to Australia, the first thing that I was looking for is somebody who can teach me about the rules and regulations. So I stumbled upon a book called 0 to 130 Properties in 3.5 years, and the author is Steve McKnight. And that actually caught my attention, is that can you buy 130 properties in 3.5 years? And of course, for that to know how he did it, you have to read this book. It's an amazing book. It will be an eye opener. And of course, that strategy might not work in today's world, which is why it is very, very difficult to buy 130 properties in 3.5 years in today's world. However, it gives you an idea of, okay, what is possible. So 3 things that I picked up in that book is, what are the things that I should not buy, which is clearly the way it has been mentioned, that you need to buy something where there is some problem and where you can solve it, so that you can manufacture money rather than wait for market growth. And the second thing that I picked up from that book is, you should always buy something which is ugly, buy something which is very nice, is not nice and all, so that way you can always find out a gem in somewhere it's hidden. Because if the property is nice, is a nice location and all sort of things, then guess what, there are so many people who are competing and you have to pay the premium price to buy that property. Okay, enough. So now you got it. So I read that book, I understood. So what I did basically, I went to see that, okay, in Sydney, there is no way I am getting a property which is called positive cash flow property. Now, back in 2015, around that time, positive cash flow property was quite rare in Sydney. Even today is even difficult, but back in those days also it was difficult. I was finding properties where the purchase price, particularly I was looking for a house, so I was not looking for any kind of a townhouse or any kind of apartments. I was looking for a house, an old house, and I was looking for a house in Sydney where I was living in the western part of Sydney, and 400, 500, 600 square meter block, and it's an old house. The price was around 700, 750, even 800k, and the rent that I will be getting from that house is around $500. So I was not able to find something which is kind of a positive cash flow. So what I did, of course, through some little bit of research, understanding, I ended up going to this place called Marsden. Now, this is the first thing that I wanted to tell you, that it is not about particular location. This is the first point I wanted to raise. I bought it without much of knowledge about this area. My thought process. Now, if I just quickly show you where Marsden is, if you see this pinpoint, and this is the location, and where it is from Brisbane, and about 30 kilometer, 25 kilometer, and let me check that exact distance, and in Gold Coast. So about half an hour drive from Brisbane and about 40 minutes or so drive from Gold Coast. Let's have a quick look. 9 Diana Street, Marsden. This is the address, and if I just give you the direction, and if I just show you that, okay, it is from, let's say, Brisbane city, you will find that the distance is about 30 kilometer, and if you go via M3 or M1, it is going to take about 32 minutes. So this is one of the key thing I wanted to tell, that 32 kilometer from Brisbane CBD is my property. At that time where I was living, it was even further from Sydney CBD. So from Sydney CBD where I was living, it's about 35-37 kilometers. And on the other side, if I just, instead of Brisbane city, if I put a Gold Coast, and if you see in the Gold Coast, it's about it's saying 60 kilometers and is about 49 minutes. So that was one of my thought process, that I wanted to buy something where I can access both cities, Brisbane and Gold Coast. Now at that time, Brisbane's Gold Coast was not as big as today in 2024, but back in 2015 also it was like after Melbourne and and Sydney, Melbourne, it is the Brisbane was the third biggest city, and Gold Coast was also booming. So I wanted to buy in between. That's it. Now what I ended up doing is that this Marsden is under a council called Logan City Council, which I did not know at that time. I was completely novice. I didn't know what council is, and I saw this house, and this house was for sale by owner. Now when it was for sale by owner, although it came in the realestate.com.au, I was like, okay, with my little bit of skill, I would probably be able to make better deal. And also I was not much confident at that time to talk to different real estate agents, so I just went to discuss with this owner. Now what I also did is that I did not buy this property without seeing. It's not like that I will just go through a buyer agent or something and then I bought. No. What I did is that I took a flight on Saturday morning. I talked to this owner and then book an inspection time around, I think, 10:30 or 11 in the morning. So around 4 o'clock I started from my home in Sydney. I parked my car in the city, in CBD, Sydney Airport, and from Sydney Airport I took a flight. I went to Brisbane. From the Brisbane airport I took a hired car and went to that property. So this is all happening on Saturday. So my Monday to Friday job was there, and Saturday morning I was doing this. First time without knowing anything what I was doing, and I was like, okay, I rocked up to that place and I was talking to the owner, and let me tell you how that property looked at that time. The property, it is, let me show you few photos of that property at that time, and the photos that if you see the properties look like this. It's a two-storied building. And in this two-storied, if you see that there are a lot of trees here, and if I can show you some of the things, like it's a two-storied building and fully brick. And I love that because of the one fact that it's a fully brick house. The second thing that I also wanted to say is that it has a lot of trees, which was a big problem, but at that time I did not know, but I just wanted to buy. So this is, if you see some of the photos, it's like a very average house. It's not particularly lucrative. This is the living room, and the other side of the living room, if you see, this is where the kitchen is, and from this door it's actually the back side of the property. This is the kitchen again, and this is one of the bedroom, and then similarly you see the other bedrooms as well. And this is where this is one of the toilets. There is one toilet upstairs, and this is the downstairs, because it's a two-story, but the downstairs, although it is not legal height, well, I did not know at that time what legal height is. I thought, oh, okay, fine, this one I can put partition and maybe two families can live, without knowing anything about the council rules and regulations. I'm just telling you the thought process of why I bought this and what was the reason that I bought this one. Then so these are the other photos, if you see. So what I am actually here to tell you, this is just an average house. In fact, this is one of the biggest mistake I wanted to tell you as well, is that the house had a swimming pool. Now fresh from coming from abroad like India or South Africa, when I see a house with a swimming pool, what is your emotion kicked in, right? That is one of the mistakes that I made. I should not have bought property with a swimming pool, because property with a swimming pool, guess what? It is the tenant who is going to live in the house. I am not going to enjoy it. So why my emotion is there that it has a nice swimming pool? If I am buying for myself, then it makes sense. But because I was buying for tenant to live, because I was in Sydney, there is no way I am actually moving. I was moving to Brisbane, so it was an investment property. So it was a biggest mistake. Later on, of course, I chopped up this swimming pool and I filled it in because it was too costly for me to maintain, and that rent that I was getting is only $10, $20 more, because without swimming pool, whatever rent I was getting is almost similar. So there's no point of keeping the swimming pool. So that was one of the mistake. Never ever buy property with swimming pool, particularly if you are buying investment property, because the cost of maintenance is quite high and it's the owner who has to pay all these maintenance. Like if the pool has some issues or it breaks down, you have to change it, you have to pay for it. Okay, so these are the photos, and it's the back side of the house. If you see, this is the back side and this is the balcony from where you're seeing the house, and it is the house. It looks like this. Now this is a 1014 square meter block, and if you see all these houses in the same sizes, right, it's 1000 square meter block. That was actually intriguing. Coming from India, one of the things that I wanted is to have a bigger block, because the land is where I believe that it will always appreciate. And this is another key principle that you need to think when you are investing in real estate, that how you can buy something where the land is there, because land will always appreciate and nobody can take the land from you. 10 years, 20 years, 30 years down the line, something might happen, and then your house needs renovation and all. But guess what? Your land does not need any renovation. The land price will keep on growing. So that was one of my things that I wanted to buy. I wanted to buy a bigger block, 1000 square meter block, because my thought process was that, hey, I will make a barrier and keep two. So I'm going to build another house at the back of the property, so it will be 2 house 2 income, without knowing anything about the council approval. Now of course there is another mistake of that particular property, is that you cannot subdivide, although it is 1014 square meter block, because it does not have the side access of more than 4 square meter. It has enough side access to build a granny flat or something, but you cannot subdivide. You can't. To do the subdivision, the council rule is that you have to have a 4 meter distance. And guess what? If this house, and of course it is not going to show too much on this, if the house on the left hand side shifted maybe a meter from that side, so that way in this side only we have 3.75 meter, it could have been 4.75 meter, and if it would have been 4.75 meter, then I would have easily subdivided and made more money. So that was another mistake. If you are thinking that you can subdivide just because it's a big block, it might not happen if you do not have side access. So check the council rules, talk to a town planner before you decide to buy it. This is important for you to know. Okay, that comes the property itself. The swimming pool I actually mentioned. Now let's have a look of why I bought this property. Another reason that I bought in this house, as I said, is I was dealing directly with the owner. Now owner, from the discussion, what I actually figured it out that, hey, they have been trying to sell this house for the last 3-4 months and could not sell it, which is why they went for the agent and then they came back and they tried to sell on their own. So they originally priced this property for $395,000. That was the advertised price. Now I did not know anything about the market much. I was doing a very simple calculation. The calculation that I was going with is that how much rent I am going to get from the property. So I actually spoke couple of the agents and I found out that the rent that I can get is around 480 to 500 max, even though if I have to do a little bit of renovation on that. So based on that, I see that it's a good investment just purely from a comparison point of view. And that is another point that I wanted to make, is that you have to compare deals. The comparison of the deals is, if you see this deal and if you compare the same thing in Sydney at that point of time, is basically using that like say $750,000 or $800,000, I can buy 2 properties of 1000 square meter block in Brisbane or closer to Brisbane, whereas in my thought process was at that time I would be able to make these 2 will grow much more than one in Sydney. That was my thought process. Now of course You could always argue with that, and I'm not going with the argument. I'm just telling you my thought process, why I bought it. It's up to you to decide. Even today, where would you buy, why would you buy, but which, hopefully this will give you kind of a reference point for you to understand. Okay, now that you see this the house, then the coming part, the price. So 395,000 they were asking. I started negotiating. I took a lot of notes about, took photos and notes at that time, and then I said, okay, fine, I have checked I have taken quite a few notes during the inspection. Let me go back and check, and then I'll come up with a price. Okay, so this is one of the things that I wanted to tell is, do your homework a little bit more before you can provide a price. And my thought process, because remember, this is, I'm talking about 2015, I did not have much knowledge. So I said, okay, fine, if it is $350,000, then I will buy it. So I tried to negotiate, and although it was not particularly a low ball, but if I would have bought at that market at that time, today with my knowledge, I could have bought this property even lesser. I could have started even 320,000 or something. Remember, this was being sold for sale by owner, and the market in 2014-15 was quite different. It was not a lot of investors at that time. It was much less as compared to today. If you fast forward today in 2024, there are like, this property gets sold on auction. Okay, so what's the price that I paid? After much of a negotiation, I actually ended up buying that property for 367,500. I put that contract price, and after doing some building and pest inspection, I even reduced $5,000 more. So my actual price that I paid is $362,500. But let me just show you this, which you will be amazed now, and I'll come back with the points of why it gone up and all. Now 9 Diana Street, Marsden, if you go with the valuation, and then again you will be able to see this property, and it is currently showing 728 the property value, and it is going to be, it's high confidence that it will be sold. In fact, recently I spoke to my property manager, and then he thinks he can easily sell it for 800k without any to be done, because the market has gone up drastically now. So in 2015 I bought, this is 2024, you can see that it has gone double. Now I wanted to tell you a few things. When I bought it, I thought I will be able to subdivide. I am not able to subdivide. When I bought, I thought that having a swimming pool was a good thing. That was a wrong decision. Having a swimming pool is not increasing the property value. When I bought, I thought that this area is going to grow faster, but the council was really slow, and this is the low socio-economic area. So there are a lot of mistakes that I made at that time. Yet now with the market movement, it has gone significantly. So that was one of the things that I wanted to tell. If you want to invest, don't wait. Just invest and then wait. Because if you keep on waiting, if you look for a particular opportunity, perfect locations and all, then you will keep on waiting. As long as you have enough sufficient deposit, as long as you are able to borrow, then invest. And invest somewhere where is a bigger block, where something that you believe it is going to go up irrespective of what happens in the market. It will have some sort of a generic appreciation. Now if I could have subdivided this property, if I could have not have that swimming pool, which actually just chopped up and putting that, I had to pay about $20,000. Some of those mistakes, if I had not have made, the property would have made even more money. But in spite of that, it is making quite a significant, if you see that calculation, that all the growth that I am getting, it is quite significant. Now let me show you again. Yeah, this is 2015, and in 2015 I paid, as I said, 367,500, and of course I said I had to wait. I came to 2014, I had to wait till June finish, and in July actually I did my tax return as early as possible so that I get my 1 year tax return and I can buy the property by showing the tax return. So that was one of the things. Perhaps like you can buy if you just came in within 3 months, as long as you are working for someone else, you have a salary slip, and bank might give you loan as well even with 3 months salary slip. So check with your broker, talk to broker how much you are eligible, and then you look for this. I must tell you one thing, that if you are looking to buy a property, first check how much you can borrow, how much do you have as a deposit, and look in that range only. There's no point of looking a property of $1 million where you can only borrow 500,000. Then it is always better to look for, otherwise it's a waste of time, right? Why would you look for something like a $1 million house? It's like watching something that you'll never be able to own. Whereas look for something where you can buy in an area where based on your budget. It's an important part because your time is limited. You don't want to waste your time unnecessarily. Okay, now next part is, once you know that about the property and you know where it is now, and you also found out that how I bought it, how I went. Ever since then, of course, I visited many more times. I met friends. I made few friends. Some of the property managers are. Of course, I have multiple other deals in that areas as well as of now. However, one more thing I wanted to clarify here, that if you see that 2015, it was the price that I bought it for 362,000 with 362,500. So if 1991, if you see, this house got sold for 108,000, right? So from 1991 to 2000 is like almost 3 times it went up. But what interesting, and it is not showing this result here, is this house around 350,000 in 2010 also. And if you know that up until 2018 or 2019, this house was hovering around 400,000. So from 2010 to 2020, this house did not grow. It was like it went, because if it doesn't grow in 3%, 4%, you can consider itself it is actually going down because of the inflation, right? So if somebody bought this house for 2010 and sold it for 2018 or 2019, this person would not have made any money. In fact, this person would have lost the money. So that is one of the key principles I wanted to highlight, is that house price does not go up in every single year. In fact, if you see, this price was hovering, if there is no graph, if you see the graph, it will be like up until 2018, 2019, it was 400,000 only. It only during COVID, after COVID, from 2020 to 2023, 24, last 3-4 years, it shoot up, this become double. So on the other side, if I would have bought this house in 2019 or 2020, and now in 3-4 years, I would have made double as well without doing anything. So what does it mean? It means that it is very, very difficult to predict when the price will go up. If it is a generic price, it is impossible to make it up, prediction like that it is going to go up. What you need to do, you need to buy and wait, because it is always easy to look back and say, oh, if you would have bought at that time, you would have gone up. But hey, you did not know. Hindsight is always 2020. Question that you will be asking is that where can you buy today, so that 5 years down the line, 7 years down the line, there is a strong chance. Again, there is a strong chance. You cannot predict. No one can predict. If somebody is predicting and saying, they are lying, because it is almost impossible to predict. There are so many varieties, so many different parameters that you have to consider to know whether the property price is going to go up or not. What you need to do is that what you can afford, where you can afford, and where you see is the best based on your research, and that's what you will buy. And this is one of the example that I saw. It's a regular suburb. It's one of the low socioeconomic area. It's one of the place. It's not closer to my where I was living, but yet I bought without knowing, even without making so many mistakes. As you see that, yet is making money. You could have said that, oh, what if the market was flat even today? But guess what? Even the market was flat today, the house, it's a 2-story house. Think about how much it will just cost to rebuild. At that time, one of the thought process was also just to replace this building, I had to pay about $400,000, because at that time I took the insurance of $400,000 just to replace the building. And the land, according to that land value from the Queensland government, it was coming around $250,000 or $260,000. So if you add $250,000 plus $400,000 is the replacement value, although it is an old house, it's coming around $650,000. So in other words, if I just buy a plain land of 1,000 square meter block and then build a brand new, it would have cost me $650,000, whereas I bought this for $365,000. So if you can sort of gauge this kind of calculation and find this kind of investment, you will never be wrong, because as I said, the land will always appreciate. Land is always scarce. Although in Australia you might think there is a lot of land, but remember, not all lands have been released by government, and this is being a 1,000 square meter block, it is always going to be lucrative, which is why this price has gone up so much today. Okay, so this is where it is now. At that time, one of the mistakes that I also did is the council itself. The Logan City Council, it's a low socioeconomic area, and there is no train station nearby. There is no, like, you have to rely on bus. But at that time, one thing that I realized that, hey, you have cars, you have parking, and the Brisbane and Sydney and Gold Coast is not far if you drive. So that was my thought process to buy this property. Okay, now let's move to my circumstances on how I bought this one. Now, as I said that because I was doing IT contracting, so through contracting, of course, I was making money, and my day-to-day expenses, I made it really low. So I was able to save quite a bit of money, around $70,000 at that time I saved the first 1 year. And because $350,000 or $360,000 odd, as you see in this house that I bought, I was kind of in a position to see that, oh, 60-70,000 I already have, all I need is the stamp duty, around I think 10-12,000. Somehow I managed, of course, and then I bought it. 80% I took bank loan, 80% from bank and 20% my money, plus 5-7% is the closing cost that I had to pay as well. And that is how I bought my first investment property. I hope you find this video helpful, and I hope that you got some idea of how to look, where to look based on your budget, so that you are not actually analysis paralysis mode, and you are also not relying completely on your buyer agent or somebody. Because guess what, even though you actually ask for a buyer agent to help, unless you know what you want, it is always difficult. And what is your goal, what do you want to achieve from your investment property, that is something that you have to figure it out. No one else can tell you. Again, as I'm saying, that I bought this one is to make a significant capital gain, and also my thought process was to subdivide, but I could not subdivide. I was in fact planning to put a granny flat at the back, but not really at this stage. I am just keeping it as is now. In the next part, what I am going to share with you is the nitty-gritty of what I turned, how this property turned, what are the things that I did, and what is as of today, and what is my plan for future. So if you are interested, and watch the next part.